We're live on a Saturday night, and I changed it up a little bit. I typically do this on Friday at 9 o'clock Eastern Standard Time. I was indisposed. For you guys that are actually new to the Independent Investor channel, you really need to seek out one of my drop points for resources, and that's within the Facebook group. I've been a little bit less active than I would have liked to have been in the last month or so. That will be an ebb and a flow place, a drop point for information. I have got an amazing base group in there that post a vast amount of information from all over the internet. I've got the guys flowing into the group tonight. I apologize, but I also thank you for your flexibility. I also thank you for all the confidence that I've received in the Facebook group. That it means the world to me. Not really my favorite topic in the world, but yesterday was a very, very nice day for me. I've worked very, very hard before my full-time career, and a lot came together yesterday for me. And I just wanted to thank all you guys for your congratulations to me. That meant the world to me. I really appreciate it. But thank you for your flexibility. It just was not in the cards to roll yesterday, but that's fine. Hopefully you guys don't mind. If this is a better, more opportune time for people, 9 o'clock allows me to kind of jump on here when my day kind of throttles back a little bit. And I know a lot of people tune in to the message after it's recorded. But I think these live streams are really important to provide kind of some accessibility to my group. That way they can hit me up with some direct questions. I still have a ton of people that are just new to the stock market, and for some way or for reason, they're getting tuned onto my channel. And I think a lot of my subscribers are sharing it with family members and friends, and that's a good thing. And so for a lot of these folks that are just kind of embracing this new idea, the stock market's scary enough, without throwing a new concept out there that even I didn't know about, up till about 7 years ago. And I understand that's a scary thought, but don't hesitate to hit me up with your direct questions specific to the self-directed investor program. Why do we do it? What's the benefit to doing it? Why would we opt to go away from a professional? You guys need to look to validate that information for yourself. And it's not going to come immediately. And you're not going to understand all the ins and outs of self-directed investing when you start. But certainly my group through the Facebook, everything's free of charge. There's no charge to take in information that's readily available online. It's just there's not a lot of people that are participating in the self-directed program because it's not an openly advocated for program through the local media channels. All right. So I did just post in the Facebook group a comparison between the February volatility and my current portfolio value. Now that's part of the value, but just to show the difference between the value in February and here we are, the start of June, how big of a difference a couple months can make. And I did that to demonstrate, when that was going on in February, I don't bat an eye at that. I actually look for opportunities to buy. And I did take some opportunities to buy after the volatility had settled down, but I didn't do a whole lot of buying. I think I told you guys through the February volatility, I exercised my defensive strategy in just holding the stock that I own, right? Good quality names will pay off over time. And that's what we ended up doing. So I'm going to probably go for an hour tonight. I don't know how many people are going to tune into this live stream on a Saturday, but this is kind of a makeup. There are some stock moves that I made this week, and I want to let you guys in on those. But certainly wanted to do the live stream last night, but it wasn't going to happen because yesterday was kind of a day of celebration for me, friends and family, things like that. So I kind of want to address one question that got me going here at the very beginning from June Fan 11. Ryan, is there a particular reason that you don't own Berkshire Hathaway? And I responded in the script there. There's really no good reason. Berkshire Hathaway can be a really good cornerstone in any portfolio. I will be buying Berkshire Hathaway at some point in my life, and I will be buying it long term. I will not be selling the stock at all. I will not be justifying investing in that as a trading. I will be investing in it for the long term. But I thought that was a good question. Thought I'd let you guys know I did buy some stock this week. I bought 185 shares of stock, split across 3 companies. The first was the largest position I took. I actually bought Walmart here in the low 80s. Got an entry price somewhere around $82. So picked up 65 shares of Walmart, ticker symbol WMT. I want to get to that question. I just had one pop in that kind of got my attention. That's really cool. So 65 shares of Walmart this week. I picked up 100 shares of my 4th bank, which is Bank of America, ticker symbol BAC. So that is the 4th bank, actually the 5th in the financial services, probably the 6th if you throw Blackstone Group in there as well. But they're more of an alternative, kind of a holding company in and of itself. They hold assets under their portfolio in excess of $1 trillion, actually. But Blackstone Group is huge. But Bank of America, Wells Fargo, JP Morgan, and Citigroup kind of rounds out my financial exposure. And I'm a little underweight financials, a little bit more than what I would like. I'd like to have actually more exposure. I do own PNC, and I also like Visa as well. Visa is more of a technology play, and then PayPal. There's some really, really good names, and you need to make sure that you're looking at the financial sector and making sure that it's getting its due attention. The last stock that I bought, I just added to an existing position in Royal Dutch Shell, Class A shares, traded under the ticker symbol RDS -A. So added to that position. I think it's set up really, really well to benefit from increase of oil prices going forward. And it's a little bit more European oil exposure as well. I'm extremely happy with my position in ExxonMobil, and I'm extremely happy with my position in Chevron. So those are the moves that I made this week in a stockholder. For anybody that did not pay attention to the stock market this week, it was a good week to be an investor, no doubt about it. There was a slight hiccup midweek, but all those losses were actually made up for, and then some in the last 2 trading days of the session this week. So it was nice to see that. So if you guys have not joined the Facebook group, just kick me over an invitation and I'll let you into that group. There is so much resource on there just to read through. And honestly, in an evening, you could scan through that and be so much more leaps and bounds ahead of where normal people are, or they would like to be in their investment knowledge, but just don't know where to find the information, or don't have somebody like myself to encourage that type of participation in seeking out that information on your own. And again, that's one of the cool reasons why we like to do these live feeds on the Independent Investor channel. It really just kind of, I bought 20 shares. Sorry. I bought 20 shares of Royal Dutch Shell. So that rounded it out for this week, 185 shares. And I think I'm kind of up to date with you guys. I don't know if I don't have Facebook a little bit on the chopping block a little bit. I have made killer money with Facebook. I'm actually thinking about, I'm up 13% right now on the 2nd position. I've already taken profits once in Facebook, and my accumulation there is actually getting quite large. So Facebook, I'm going to be actually looking maybe of taking a little bit of reduction and rolling those profits into a new couple holdings that I've got my eye on. I don't know, maybe Berkshire Hathaway, we'll see. It'll probably be Microsoft and Intel, because I took profits in both of those stocks to free up some cash to take some positions in some of the new stock that I bought. So that's what we ended up doing this week. I'm going to start to kind of get to these questions. I've got Mystery Queen 86, who's very, very loyal to the show. So I really try to identify. I go in succession on these live feeds as the questions come in. So hi, investor. I was looking into a stock in CenturyLink and Iron Mountain. I'd like to know, do you think the dividend is too high? Yes, I do. The dividend is too high. And if you're a beginning investor, I've been going back and forth with one of my subscribers about, really having trouble with opting into a self-directed account, and putting themselves in the driver's seat, because most people don't think that they're able to pick winning stocks. And I contend that the winning stocks are the ones that are typically right in front of our face all the time. And I hit this individual back with a laundry list of stocks, and it started with Apple, Microsoft, Intel, Verizon, maybe potentially who you bank with, Bank of America, Wells Fargo, JP Morgan, some of your consumer products companies, you've got Johnson & Johnson, Pfizer, Merck. We've all heard of these companies. Procter & Gamble falls into that category, Kraft Heinz Food. But I would much rather see you get into a Comcast if that's the sector that you want to be involved with. Now, not knowing what type of accessible cash that you have in your stockpile, whether or not you're invested or you have started a self-directed account, I would not recommend trying to bottom feed. I'm a best of breed investor, okay? I get that from Jim Cramer. I've studied Jim Cramer's work for decades, not years. Okay. And you always want to enter into these high quality stocks. And if you look at that comparison between my portfolio in February that dipped to 155,000 and now it's just shy of 180, you see the benefit of being able to take those good quality stocks into a downturn. If the market, just by no control of your own, enters into that downturn, I would rather own stocks like Apple and AT&T and Comcast and Waste Management, Wells Fargo, Home Depot. Guys, I'm giving you all these right off of my portfolio cuff. And it makes it so investing isn't quite as difficult as so many people make it out to be. You ever shopped at Costco? It's a wonderful stock, right? If you've ever been to Home Depot, it's a wonderful stock. Take your smartphone and turn it over and see what the symbol is on the back of it. Investing doesn't have to be difficult. So looking to bottom feed on some of those. Now, it doesn't mean that you can't buy CenturyLink and make money. Okay, I'm not saying that. But I don't enter into dialogue and I don't expect people to join the independent investor channel to ask me about stock picks and expect me to give them some sort of magical stock that's going to give them some sort of rate of return that's over what can be expected from the market, right? I do advocate for investing in, good quality ETFs because they're very low fee. And if you're a beginning investor, I would love to see you take a starting position in the S&P 500 before you start investing in CenturyLink. And, it's funny to answer that question for you in that way, because you think, okay, what do I know about it? Look, I've been through all these validations for myself. I've invested in these companies. I've tried to make money on a trading perspective or an investing perspective, and I end up losing every single time. So I've just stopped doing it because you can't really relate with the benefits of value investing until you become a value investor and you start to dollar cost average when those stocks go down, and when they go up, you make money. And every single quarter that they're paying you a dividend, you're starting to accumulate your share base and you're acknowledging or participating in the success of these good companies. And I use Apple more often than not, because if you don't own a good quality company like Apple, you don't need to be looking at a CenturyLink or an Iron Mountain. You just need to be looking at the very best of breed. And in my particular opinion, you could probably pick, from 5 good quality stocks in the technology sector that'll get you off on the right foot. And that way, when you go to build your portfolio next year and the year after that, I responded back to a comment just today, and if you were to max fund your Roth IRA, your self-directed account with $5,500, that really doesn't buy you a whole lot of stock in the grand scheme of things. What we're trying to do is build cornerstones in the portfolio strategically. So when you go from zero to your first allocation of stock in the stock market, that you're putting yourself in a position to build upon those previous decisions. When those dollars go in there, you're putting yourself in a position to where next year you can say, okay, I did technology and financials this year, right? I'm going to look to add maybe a discretionary and a healthcare name, right? So the first year you may add an Apple Computers, and you may add, let's say, a JP Morgan Chase, okay? So you're only able to add 2 single stocks and maybe buy some VOO in that account. So you split it 50-50. You do $2,500 or $3,000 in the S&P 500, and then you buy 2 single stocks. That money is going to fluctuate in there. But the following year, when you look at that, now you've got the option to either invest more in the S&P 500, add more into your single stock allocation, or continue to diversify and broaden your base in that portfolio by maybe adding a Pfizer or a Merck, or maybe adding a Dow DuPont. Maybe you want to take care of your materials exposure or your industrial sector. Maybe you like John Deere, and you hit me up and you say, Ryan, what do you think of John Deere? And I'm going to tell you it's a spectacular company, right? So it's just putting yourself in a position to where down the line you're going to be able to build upon each of your previous successive decisions. And that, in essence, is how you portfolio build going forward. That's an excellent question. Thank you so much. Nyla just says, thanks for doing tonight. I kind of felt like I owed you guys a little bit. I really enjoy the visibility. I really want you to tune into the Independent Investor channel and really relate with where I come from. And this allows me to do this with my audience. So thank you very much. I've got Indie Development says hello. You're welcome. Thank you. Hello. Congrats, champ. Thank you very much. I really appreciate that. I had Muhammad Aziz pop in here and hit me up, and that was the question that got my attention. And this will get my attention every single time, because I really like to resonate with these questions from folks that I've been there. I've been there, done there. And his statement is, I have no money. How can I start to business? I may never start a business. I would like to. I'm kind of an entrepreneur at heart. You don't have to be an entrepreneur to be a stock market investor. Okay, you don't. I'm actually trying to water down being a participant in the stock market as something that everybody has to do. Everybody. And I'm speaking about people who may not even have a lot of money. Those are the people that need to be participating in the stock market more than people out there that actually have money. The misconception is that investing is only for the rich. And I completely disagree. Now, with technology, folks that don't have access to, let's say, a financial planner, etc., which is the old way of investing, the new way of investing is to use technology to your benefit and allow yourself to become a participant in the stock market by using the power of technology and using the power of information, right? Knowing that the self-directed option is out there, direct plugging yourself into the market. And in an essence, if you never ever owned your own business in your life, investing can be just that. Because I just went through the spiel of offering a name like Merck, right? If you invest money in Merck and you set it up as a dividend investment, right? Every single quarter, it's going to pay you a dividend. Now, as small as that dividend may be, isn't that in and of itself kind of its own business or its own money machine? You guys can look at however you want to, but I have about 30 holdings in my portfolio. Each and every one of those pay a dividend on a different frequency for me. I look at each and every one of those as being its own money generator. Now, to be honest with you, I look at the Independent Investor channel the same way. It's just a side hustle. It's a way to make a little bit of passive income within its account. I don't take money from my customer, right, to support my initiative. But what little money that I do make on the independent investor channel is kind of that idea of starting that business. Now, if you had a particular topic in mind, or if you had something that you were absolutely passionate about, I can't necessarily do how to be a successful YouTube video, because for all intents and purposes, by normal matrices in judging how successful a YouTube channel is, this is not a successful YouTube channel, okay? Now, it's successful to me, okay? But anybody would look at a channel with 4,000 subscribers and say, you're tiny, right? You're a non-existent channel. And I've always said, I value my channel with my community, okay? I've got 300 or 400, maybe 400 or 500 really loyal subscribers to the channel, and that's where I put all the value. I really don't care about having 100,000 subscribers on my channel, 70,000 of which could care less about the message. That's not why I'm doing the channel. So if you had any inkling to start a YouTube channel, or if that's what you were talking about, I would premise you with this, and I would caution you to buckle your safety belt, okay? Because it is quite a ride. It's quite a bit of startup money, in that if you have any idea of making money on YouTube, certainly there's some laws of incorporation that you have to understand. You have to monetize, and you have to be willing to learn. When I started YouTube, I made every mistake in the book. Every mistake in the book. And there's not any type of manual that says, here's how to succeed on YouTube. You can tune into a lot of different places and pick up little tidbits of information. But as far as the back end of filling out a YouTube channel, it's quite complex, and it's very, very difficult. Very difficult. But if you had a niche message like I feel like I do, I think that's part of the key. And it has to be the topic that you're passionate about. Okay. So you say, I have no money. That's a very general statement, that of which is hard for me to resonate with. You know, I've met people who make $100,000 who also tell me that they have no money, because they don't. Okay, they blow it all. So it is relative when you make that statement, in that I really think you guys need to understand, and this is part of the beauty of me offering my testimonial on here, is I've been in Hawk before. I've owed back taxes to the IRS, right? I've never made the median income in the US. I'm still working up toward that, even with my promotion. Maybe I'm there now, I don't know, but you know, for all intents and purposes, I should not have the level of financial success that I do. The reason that I do is not because of my physical efforts. It's because of my mental efforts. Make no mistake, all right? And a lot of people think, okay, I have no money, therefore I'm going to invest in the stock market, or I'm going to try to accumulate some money so I can invest in the stock market, so I can consider myself successful in life. And this is going to be part of a much larger portfolio of ideas that I roll out to my group about having the stock market over here as just being that piece in your life. But I'm going to say something right now that may be extremely controversial with a lot of people in my group, and that is completely fine. But here's the thing: success in the stock market, you are not going to be able to fail at multiple entities in your life and expect to succeed in the stock market and have that be your defining level of success in the stock market. It's just not going to work that way. What I mean by that is, if you want to be successful in the stock market, try to cut out a vice in your life over here. If you have a problem with alcohol or you know, cigarettes, you know, try to cut one of those out, and it will complement this over here. You know, if you want to be successful in the stock market, get out of bed before 9 o'clock. Okay. I get up at 5 o'clock every morning, and I'm in the gym by 6 o'clock, you know, and you think, okay, well, what does that have to do with stock market investing? It has everything to do with your spiritual well-being, and it absolutely helps you become a successful investor. Eat well. Stop eating fast food. Stop drinking Coca-Cola. All right. Stop drinking Diet Coke. All right. These are all things that I had to do in my life, right? Because if you continue to buy into every one of those things that don't help you, they are actually a detriment. It's so difficult to try to succeed over here with this big anchor tied around your leg over here. It's really difficult. And a lot of people, man, if you can resonate with that message to try to find a balance in your life, it's going to make stock market investing so much easier, because you're going to have a winning combination of a lot of different things. For a lot of people, they can press the success button and they end up being successful. My position is, and I've never been that lucky, I have friends that push the success button and they're there. They're there. I'm not one of those guys. I have to work for every single thing I have. So I have to push the success button on every single aspect on my life. Try to do this better. Try to do this better. Try to budget better. Try to save money better. Try to be a better investor, right? Try to take hold of the stock market. Don't ever doubt yourself. Tell yourself that you can succeed in the stock market. Don't ever tell yourself that you want to get involved in the stock market, but you don't want to take control of the stock market and be successful in it. And that's a lot of what comes down to the mentality of just taking a program and making it successful for yourself. That's what it comes down to. All right. I've got Jake on the line who says, congratulations. One of my fellow service members. Thank you very much, Jake. Appreciate that. Baba hit me up and says, Ryan, is it too late to invest in MasterCard? It's not, and it's a great stock. You can invest in MasterCard. You can invest in American Express. I wouldn't invest in either one of them. If you were interested in the payments space, Visa is my favorite. I currently do not own Visa. Okay, just a disclaimer there. And also PayPal. I'm very excited about PayPal. I've been in and out of PayPal in trading positions, but not investable positions, okay? My financial positions are in the major banks right now, and that's just what I choose to do. I may make less. I'm going to sit on the dividend on all these fat banks for until they start to appreciate, but the multiples are actually quite impressive. And everybody needs to have, if you have a beginning portfolio, I would love to see you guys pick your favorite of the 4 banks: Bank of America, Citigroup, Wells Fargo, or JP Morgan Chase. JP Morgan Chase probably being my #1 pick at the top of the list on that for new investors. But certainly any one of those could be a cornerstone in the financial sector. The answer to your question is no. You can invest in MasterCard. Make sure that you're making these investments in the self-directed account. Remember, it's not always about the particular stock. And I want to premise, I get this all the time. What about this stock? What about that stock? Remember, we're already winners as self-directed investors by investing in the self-directed account, right? So if you want to put MasterCard in a self-directed account, you're gonna maximize whatever profits you're gonna make from MasterCard from investing in that stock, and that goes with any stock that you ask for. All right. So let me get to some of these other questions, guys. I've got a really good group in here tonight. So very cool. Took care of these. Yep, good. What are the difference between the Royal Dutch Shell shares? Yeah. I've went through this before, and I got hit with this. I'm on Brody Bell question right there in the middle of the communication, addressing Brody's question. What are the difference between the Royal Dutch Shell shares? I was always taught to buy Class A shares. I've been burned by money managers putting me into Class C shares, that of which were not and did not turn back the year-over-year performance of the Class A shares. I believe it comes down to voting rights, but there are Class A shares, B shares, C shares, and any of those subsequent other than A shares usually do not perform as well. So I always recommend buying the Class A shares. I know Royal Dutch Shell has Class B shares. I don't know the difference between. I always just opt for the A shares. Sometimes you'll look at shares like Google, right? Because Google trading under the ticker symbol GOOGL, right, are the Class A shares. And then GOOG is the non-voting shares. Okay, so you have preferred shares and you have non-preferred shares. And I'm not sure the difference. I always just try to buy the Class A shares and I don't worry about it. But to give you the difference between the two, I'm not really sure on that. But I have owned Class C shares. And it was a kind of a shady move by the financial planner actually to do that to me, because they received more of a kickback on offering those to me, and I just wasn't the wiser. But always buy the best of the best when you're looking to buy shares, and I always buy Class A shares. All right. Hello, Ryan. Southwest Airline is at a huge dip right now. Do you like the stock LUV? Thanks, and you're welcome. I do. I actually love flying Southwest. I think they do fantastic. I don't like their group boarding. I know a lot of people will disagree with me. I don't like the group boarding. I like having an assigned seat. I think they're a wonderful airline. I'm on Invincible Summer's question, and it's interesting that you mentioned the airlines. If you guys can actually believe this or not, I have never invested in an airline ever. It's one of those sectors that I'm just not that interested in. It's one of those sectors that there's so many other stocks out there that I would rather invest in, as opposed to looking at the airlines. Now, I do pay attention to them. I do have a watch list that is devoted to the airline subsector of the industrials. But as far as, you know, owning a specific airline, the competition is so strict. The pricing power is so competitive, you know. Air travel is set to boom. And I know the airlines are going to benefit from that. But if I was going to play the airline space, which I do have exposure to by investing in General Electric and by investing in United Technologies, okay, the third major industrial company that I would recommend over owning an individual airline would be Boeing. No doubt about it. If you want to invest in the airline, just invest in the company that builds the jets for all the airlines. And Boeing is actually on a little bit of a dip, 20 points off its 52-week high right now. I think LUV can get you done. I think it's one of the elite airlines. But it's interesting that you touch on that. There's a few sectors that I don't invest in, and airlines is one of them. I have never owned an airline stock. And I know Warren Buffett was like that for a long time. And then he took the plunge and just bought a bunch of airlines. I don't know what his deal was, but it's just not a subsector of industrials that I'm interested in. But thank you for the question. I think if you were interested in the stock, let's say you flew the airline and you believed in the product, as I do, I think it's a fantastic company, and I think they're well run. I think they're probably the top airline in the space. So if you wanted to make money with airlines, I think LUV could get you done. Remember to house that asset in the self-directed account. Take a smaller position, okay? I don't know what the rest of your portfolio looks like, okay? So I always hesitate to say, yeah, buy the airline, and you don't have any cash saved up. If you're sitting on a $10,000, you know, stockpile of cash, and you've got a good amount set in your self-directed account, and you've got a 401k already built up, right? Then it would be okay to take a smaller investable position in LUV. But I don't want to see that to be a main holding in your portfolio, where United Technology for me is a main holding in my portfolio. General Electric is a trading position in my portfolio, and Boeing could be a major position in your portfolio that you could own for years and not have to be subject to so much volatility in that particular industry. Because I watch it go down and up all the time. And, you know, when oil went all the way down, you would have thought that airlines would have benefited from that with the cost savings of fuel. Now that oil's on the rise, I worry a little bit about just one negative piece of news coming out, you know, about these companies. And it's just like, they're always dealing with negative publicity. They're always dealing with negative news. So it's not really something that I want to attach my dollars to. That's just my personal opinion. And thank you for that question. It was very good. I got David Strauss right below you. I'm going to hit that question. I bought shares of Square this week. Do you like them over PayPal or the other way around. I like them both. I like them both. Significantly different. But I have invested in PayPal. I have not invested in Square. I actually really like their product. I think it's fantastic. My only worry with PayPal, and my big reason for not owning PayPal right now, is the fact that I just don't understand how unique their product Venmo is as opposed to all the other major products that are coming out right now. And I never used Venmo, but I have used Zelle through Bank of America. And if somebody can tell me what the big difference between those two products, let's say me, customer A, wants to send money through text message to customer B, that's what Zelle allows me to do. And I think it's incredibly good. And it's very easy to use. It's very secure. I'm not really sure I understand how exclusive Venmo is. I understand PayPal owns a huge, huge majority of all the transactions that occur in the world today. I would definitely take an investable position in PayPal and look at taking a trading position in Square. But the same rules apply, guys. You're hitting me with some higher growth companies, and I'm a value investor, okay? I'm looking a little bit more on the value side of the house than I am in the growth. Now, I do try to strike a balance between the two, but I would love for you guys to really resonate with my opinion and understand that if you're going to own a Square in your portfolio, throw some Visa in there as well, okay? Own Visa long and own Square short. If Square ends up going up 50%, take your profits here and roll it into either Visa that you've held the entire time, or take your profits from Square and roll it into a bigger blue chip company. That's kind of my philosophy on investing. You really have to have that baseline in place first before you start picking and piecemealing some of these trading positions. And that's the beauty of it. You can probably invest in Square and make money. You can probably invest in PayPal and make good money. That there's all kinds of different options about making money in the stock market. All right, there's an infinite way that you can make money in the stock market, and you can make money with either one of those two. Certainly, a little more volatile, a little more growth. Not going to pay a dividend. I think PayPal might pay a couple basis points of a dividend, but not much. Definitely a growth story. And I've made money on PayPal. I don't currently own it now, but I like both of these stocks. I really do. So thank you for offering those two. I've got Jake right below that. Hey, Ryan, congrats on promotion. It feels good. It's still sinking in. It's still sinking in. It really is, man. It's very, very cool. Congrats and thank you. Thank you, Sarah. I appreciate that. I'm going to hit Sarah up here. I wish I would have put $5 a week away when I was 20 and 30-ish. My aunt tried to tell me about starting a Roth, but I was just in the mode of paying bills and going out every once in a while. Yeah, you're not the only one. You are not. And here's the thing about that comment or statement, and I've been there, done that. I waited too late as well. This is part of the reason why we're trying to build a community where we may get on here and we may talk live feed for an hour. You may pick up one or two things, but unless we keep the conversation going, it tends to die out. It tends to be one of those topics that you don't want to talk about at parties. You don't want to talk about or bring up with your friends. And I don't understand that. I don't understand that idea about not talking about investing and talking about, you know, what people are doing, what moves they're making, what stocks they're participating in. It's my favorite subject. It really is. So I don't know if maybe I'm just wired differently. I don't understand. But I try to offer some of those comments to you guys because I really am passionate about this. I mean, I was looking at stocks before I got on here to do my live feed tonight. Just kind of looking at what happened this week, what happened over the course of this week, looking at some new positions that I'm looking to take, what moves that I could potentially make, continue to improve upon my portfolio. I'm just a dork like that. That's just me. But yeah, I mean, you know, the thing about it is a lot of people will go through life and they'll never invest. Okay. Half of the U.S. has less than $1,000 in their bank account. That's true. So just to kind of give you an idea, to break out of that rut is very hard. And I'll be the first to pat you on the back if you're one of those in your, 30s or 40. I mean, I'm 40. I would consider myself investing correctly only 7 years ago. Now I've invested my whole life, and a lot of that time has been filled up with investing incorrectly in the stock market. So if people can really listen and say, geez, what's Ryan talking about? What's this self-directed thing all about? What would it mean for me if I started when I was 20? Even at $5 a week, or $5, a day, cut out those little vices that you think that you have to have now. I think a lot of problem nowadays, unfortunately, and I know this is going to be unpopular with a lot of younger kids, is so many kids would give up everything just to have a smartphone. And a smartphone is not a necessity. It's a luxury. It's not. And instead of paying $150 for a cell phone bill, which I don't understand how they're affording to pay for that in their early 20s going to college. I mean, I had a flip phone up till 2 years ago. And when I made the transition to my iPhone, it was amazing. I absolutely love it. I was one of those guys that will never go back, but I also run a business. I do my investment portfolio online. I run Facebook through the Independent Investor channel, so well worth it for me. But I also have, enough invested capital and enough money and a secure job and enough, extra money to kind of justify that expenditure, and I think that way too many kids justify that expenditure and a lot of expenditures that you talk about, going out once in a while. Good grief, you got to live life, but if you can just kind of find that little niche of money, or at least start the account, even if you have no money, because starting the account doesn't cost you anything. Maybe you get a little bit of tax bracket, a tax break back. Maybe you get a little bit of tax refunds, and then you've got those drop points set up for yourself to where you can pay yourself first. Let's say it's $500. You don't have to take the whole thing and put it in there. That's what I do. I've invested my tax return for the last 15 years. Every single penny goes into my savings account, and then it gets transferred over to help fund my investments. So it's a very, very good statement. I think it's a general statement, and I think it really speaks to where a lot of people are coming from when they look to start investing and what they need to get over to actually justify getting into the stock market. Because your aunt said that she recommended it to you a while ago, and you just kind of blow it off. I think a lot of people get those recommendations to get into the stock market from family, friends, etc. And I think a lot of people do the same thing. They blow it off. And I've got people who come up to me all the time who are interested in the stock market. They're like, Ryan, can you help me? Of course I can help you. And then I never hear from them again, and it's a fickle subject. It really is. It is the habit and mindset that is hard to change. I can't agree more with that. It really is. It's more psychological. And that's why I talk about, if you can make your mind stronger, spiritual, if you need to go do yoga, do it, because you guys don't understand how much easier it's going to be an investor. Investing is just that. Okay. And I find this mistake all the time, is that people are a disaster over here. They have addiction problems, they have depression problems, etc., that need to be dealt with independently. They've got multiple problems with, dietary habits, things like that. And gosh, you don't have to control them all, but at least try to make some sort of an effort, start somewhere. And so many people get into this self-deprecating idea that it's really, really hard to pull themselves out of that, to justify making small strides in each one of those things. Because if you can't make small strides in each of these categories over here, health, diet, spiritual, health and well-being, etc., things like that, how are you expecting to enter into the stock market and succeed in that? It's probably not going to happen, and a lot of people just don't understand that. And we'll continue to spark the dialogue and keep the discussion going on what it takes to be, not only successful in the stock market, but also successful in life, no doubt about it. Because on the flip side of that, I know a lot of, very wealthy people who, have been bestowed a lot of wealth, not maybe by nature of not what they've done, what hard work they've put in, but they've been bestowed this money, and automatically they can self declare themselves as successful because now they've got a lot of money in the bank and they're rotten apples. They're just not good people. So kind of take a different perspective and look at it. Just because you have money in the bank doesn't mean the significance of your life is any better than anybody else that's struggling trying to get involved or participate in the stock market. I truly believe that. It's right here. It's all right there. I got some congratulations on here from E. Amakai won, and Brian Zerfachi. Congrats on the advancement. Thank you, you guys. I appreciate it. Doug's on the line. Good evening. Nice to see you. Indie Development Labs. How much would you say is enough money to invest with, and how much is too much? That is a fantastic question. Wow. Many, many different ways to address this. And I'm going to try to address this question in a way that can help the masses. Okay. I've already said that half of this country doesn't have $1,000 saved up in their savings account. Okay. If you are unable to save money, there's no reason to even discuss investing at this particular juncture. None. Okay. There's not. You need to have some income coming in from somewhere. All right. If you want to be an investor to be rich, but you don't have a job, I'm not going to sit here and tell you that it's going to be possible for you. I'm going to go so far as to say that it's not. I'm not one to blow smoke at people. I'm not one to blow smoke up people's backside. All right. And if you do have a source of income and you don't know where to start, you need to start setting realistic goals for yourself. And that first realistic goal is to prove to yourself that you can get $1,000 in the bank. Okay. Now I throw that out there, as cliche as it may sound. Sorry, that's the expectation. If you can't prove to yourself that you can pay yourself first, and that you can't always justify buying a pack of cigarettes or buying the beer or buying, an expensive vehicle for yourself that consumes gas and everything else, and at the end of the paycheck, you're gone, you're tapped out, that's not my fault. Okay. If you can't cut back, you cannot justify all these expenditures over here and expect to be able to invest over here. Investing requires sacrifice. Okay. Because there's never, ever going to be enough money to justify going and being a successful investor if you're not willing to cut out some sort of luxury in your budget. Okay. Now, if you have excessive cash, awesome. If you don't know where to start, no problem. I can help with that. All right. But when you talk about enough money, I started with $25. Okay. When you talk about sacrifice or understanding what I mean by sacrifice, I sold my Mustang convertible for $3,000, and I started my investment accounts for me and my spouse. At the time we were newly married, with $1,500 each. I started it, and I started a dollar cost averaging program at $25. Okay. So that just goes to show you how much would it take to start. It's relative. Okay. In that particular scenario, I told you it meant so much to me to become an investor that I sold the car that I loved. Okay. I had to get rid of my car, and I took the proceeds from that, and I didn't roll it into another depreciating asset. I rolled it into an appreciating asset. And I knew that at the time, right? So now those accounts have almost grown to 100 times that amount, right? Why? Because it's an appreciating asset. And I knew that when I did it, but I had to make the sacrifice to do it at the time. All right. Now, if you do have the $25 and you do have the $1,000 or $5,000 or $10,000 saved up, and you're like, okay, Ryan, get to the meat and potatoes. I get it. I don't need a lecture, right? I'm ready to go. I can pay myself. I've got 5, 10, 15, 20, 25 grand. I just don't know where to start. Let's say you have that money, and you have an employee-sponsored 401k or 457B, I've dealt with a lot of those folks. But let's say you don't have any investment capital at all. I put you into a bracket of somebody with $0 to $5,500 of potential, okay? Now, this is assuming that you have your cash on the side, okay? But you don't have any money over here on the investment side of the house. You have a savings account, and you don't have any debt. You have a savings account, but you have $0 invested capital, all right? You need to earmark some of that capital to fund an account. And to speak to your question, how much is necessary to fund that account, okay? If $5,500 is too much to fund the self-directed Roth IRA account, all right, there's a whole multitude of reasons that I recommend that account. If you have any questions, go back and watch my catalog of videos. I explained it in depth over 165 videos, and it's going to continue to be explained because it's the most important one, all right? But $0 to $5,500. Now, to break down that $0 to $5,500, $457 per month is what is a max contribution level. 457 times 12 is $5,500, all right? So $457. And you say, okay, Ryan, $457 is too much per month. I can't do that, all right? Look at $100. $100 is almost 25% of your realized benefit to your self-directed account, all right? 25%. Now, remember when I talked about starting with $25? I often recommend that if you don't have any money, or you're asking me how much is necessary to save, but you don't have anything saved, start with an amount that you're comfortable with, because $25, $50, $100, it's irrelevant. It doesn't matter about the money. It doesn't matter. It matters more about your ability to get days, weeks, months, and years under your belt as a practiced investor. That's what it means. You have to get that conditioning to get used to watching your money, your invested capital, not your savings capital, but your invested capital fluctuating up and down over time. You have to get used to that, okay? Most people will take a big lump sum, they'll jump it on the first stock pick of the month, and they'll watch it adjust back 20%. They'll panic, they'll exit the market, and they're done, okay? I do not advocate for that type of thing, all right? So back to my $25 or $100, whatever it is that you can do. If you're looking to start a self-directed account and you're looking to fund that account with $100, $200 per month, fund it for a while. Don't invest a dime. Put that $100 in there for a year, and at the end of the year, you'll have $1,200 built up in the money market account, because that money that's invested every month, every single month, that money will come out of your checking account, go into that self-directed account, and it will sit in a money market account until you go in there and you tell it where you want to invest, all right? That whole mindset and thought process is the root of your question, and I struggle every single time I do a video to try to get people to understand that going from what I explained, from going from a saver to an investor, is one of the hardest things you will ever do. All right. That's why I'm the first to applaud you when you do make that bridge and you gap that bridge and you enter into a realm of becoming an investor over here, starting to fund that account up, because buying the VOO, which is the S&P 500's ETF that I recommend to every single one of my new investors, that's the easy part. It's the easy part. Getting people to understand the benefit of paying themselves first, that's the hard part. Getting people to understand the benefits of a self-directed Roth IRA account for anybody who has $0 to $5,500 per year of investment capital, that's the hard part. Getting people to actually start the account, that's the hard part. Getting people to link their accounts so that money comes out of their paycheck automatically and they pay themselves without the temptation of getting in there and tooling with your own money. You're your own worst enemy. You really are. You're your own worst enemy. And if you want to put yourself on a program, you absolutely will. That's the best question of the night right there. And I thank you very, very much. The reason why I want those hundreds of dollars to go in there, and they don't necessarily have to be invested every single month, is you will incur a small trading fee of $6 to $7, $8 sometimes in that. So I want that capital to build up to, let's say, 100, 200, 300. Let's say it builds up to $600. Then you can go ahead and interject that into your starting positions, into your ETFs or your starting stock positions. All right. And I offer starting stock positions all the time for giving you guys ideas on what type of ETF you could buy to start, or what type of cornerstone stocks you can buy when you're looking to start. But going from zero to something is the hardest thing to get people to understand. But all I can say is you've got to do it. You have to do it. Investing is something that I don't put out there as being optional. It's something that I absolutely require of people. All right. That was the question of the night. And thank you so much. That was a very, very good one. I did my very best for you on that one because I know a lot of people will benefit, hopefully, from my answer and philosophy about fighting through those barriers, because those barriers are real, man. And they prohibit so many people from realizing the benefits of the stock market, because you are constantly inundated with people telling you that you can't do it. All right. Ken Fisher comes on TV every single time I watch CNBC. I tune into CNBC. It's one of my favorite television channels, but they run those constant TV shows, and they come on and they're trying to win your business and basically telling you that most people can't invest on their own. I completely disagree with that premise. I completely disagree. All right. Thank you for that. That's very cool. Investing is studying. Yeah, I think most people need to understand that they're never going to have. I got Doug Whitaker talking about investing is study, and I think a lot of people need to be fair with their expectations. I mean, just because you're a starting investor doesn't mean that you're not going to make good decisions in the stock market. You have to understand that you will make mistakes. You have to understand that you will invest in a stock and it will go down. Okay. I'm not one of those YouTube guys that get on here and tell you that if you invest in this stock, you're going to be guaranteed 100% rate of return. That's idiotic. That's stupid. It's not advice that I resonate with, and it's improper and poor information to give a new investor. It's stupid. All right. It's absolutely, somebody who's giving that information is a complete idiot and knows nothing about the stock market. There's plenty of channels out there doing it too. And you have to be very aware of that. But you have to be really, really aware of your own capability. You have to be aware of your own barriers. But I think a lot of people falter in not embracing the stock market and saying, you know what, I really don't know a lot about the stock market, but I'm going to succeed at the stock market. And if you follow these steps, you'll succeed in the stock market over time. You really will. But you cannot get involved in the stock market and have unfair expectations that you're going to get invested on day one. And day two, you're going to look at your account and it's dropped down a couple basis points. And you're going to be like, this isn't for me, I'm out. You can't do that. It's planned failure to do that. All right. I often talk about and use the analogy of if you took 10 people and invested those 10 people, you gave them $100, and each of those individuals were allowed to invest that $100 into the stock of my choosing, Apple computers. And they took that $100 and they invested it. But the freedom to do whatever they wanted after that, those 10 people would all come out with different results, even though the stock is the same and the amount of capital is the same. If you were given all the freedom in the world, you would either make that trade a success or an investment a success, or by nature of your decisions, you would make that investment a failure. All right. And I want you guys to really resonate with that. 10 people, same investment, same amount of money, have 10 different outcomes that could come. They can invest, go up, sell it, panic, and they're out. They could hold on to it forever and they could succeed. They could invest in the stock and not set it up for dividend reinvestment. They could set it up and not dollar cost average that stock, right? They could get a 20% downturn and not invest more in it. They could get a 20% downturn and sell the stock and panic and lose money. You see all the different outcomes that you can have just by giving people the control of understanding that you have to aggressively make these positions successful trading positions in your account, or successful investments. All right. Very, very important to understand that. All right. I'm going to go ahead and I'm going to scroll through this. We're just under an hour, guys, on the live feed. I just got another $2 tip. I don't know, that's just very cool. Thank you very much. Very unnecessary, but thank you so much. That actually makes my night. Really, really cool. I really appreciate that. Invincible Summer, thank you so much. I really hope you guys take the information that I'm pushing through to you guys. Honestly, you can take and deploy this information, and it could be worth hundreds of thousands of dollars, no doubt about it, over the long term. And I expect that you'll do that. That's what I talk about all the time, empowering individual investors to make these decisions on your own, man. You got to be really tough. All right. What are you making the most money off of right now? I've got indie development. I've got Grill and Smoker above. What's good stocks to watch and buy in June? I kind of did away with my monthly stock buys. I would look at financials big time. Big technology is huge right now. I love Intel and I love Microsoft. I don't own them both right now. I traded out of them, took some really good profit off the table and put them to work. Alibaba had a great day on Friday. I did take profits in Alibaba. I picked it up in the low 180s and I made killer money, and I took the profit and rolled that into a little bit safer positions. You guys know I did that. But oil is definitely in play. Technology is definitely in play. Consumer staples continues to be out of play, but that doesn't mean that they're not bad investments, okay? If you look at Kraft Heinz right here, look at a Disney. I still think you're getting a very good entry on Disney. You got to be kind of cautious right now with going after the hot sectors. Industrials have come off a little bit. Utilities are really out of favor right now. They're just getting smoked. But those are some sector names, sectors that I would be looking at right now. But don't necessarily concentrate too much on picking stock right here. Focus on portfolio building. All right. It's a really good question. It's one of the most common questions I get asked. Everybody wants to know, what are the hot stocks to buy right now? And I wish people would take more of a fundamental perspective and approach to the stock market, and that there's probably a whole host of things that you probably need to do just like me, because I need to do them too. All right. Don't take this personally, but everybody needs to look at their own portfolio and say, what is it that I can do on the budget side? What can I do on the saving side? What can I do to retool my portfolio? Have I max funded? Have I max contributed for 2018? You know what I mean? Things like that. But I would definitely, financials is giving you a good entry. The multiples are extremely low. I think Comcast is a buy right here in the low 30s. I think AT&T is a buy. Some of my favorite stocks. Telecom has really been punished. Apple is always a buy. I hate to recommend Facebook to you guys right here because I won. I mean, I bought Facebook aggressively. I did. I took it into a $1,700 downturn. I'm up $1,200 right now after taking already $500 in profit. So that just shows you how aggressive I am on making it a good trade. It went down. I was down $1,700. I bought 25 more shares of it and it paid off. I parlayed those 25 shares. I made $500 on those. And now I'm looking at my remaining position of 50 shares and I'm up $1,200. I'm up 13.5% right now. So I may parlay that and look to get into some of those, the big tech. Cloud is huge right now. All right. But cloud is high growth. So you got to be kind of careful. All right. Awesome question. Thank you. What's your take on the utility sector? Is it worth holding any stock? I still own the VPU and I'm glad to do it. That's how I wanted to own the utility sector, is I wanted to own a small piece of all of them. And I think once they come into favor, I think we'll be fine. I don't own any more than 3% in my portfolio. It's absolutely not one of my favorite sectors. It's not. I mean, I really like Duke Energy. It's one of my favorite companies. I own Dominion Energy independently. But Dominion and the VPU for utilities is my only exposure. And I don't have that much in it. I only have 3% of my portfolio in it, and I won't own over exposed in utilities. There's no reason to do it. Focus on technology. Focus on oil, focus on financials, focus on healthcare, discretionary, and staples. All right. Those are going to be your core portfolio buildings. And I would almost rather you own multiple technology names than I would ever want you to try to take all of your remaining investment capital and just, you have to have a utility sector. I can do without utilities, materials. I can do without those two, honestly. Now, once your portfolio grows to $100,000, $50,000, and you've got some really good stacks of high society in your portfolio, then yeah, certainly go ahead, because you're gonna put utility sectors exposure in there, and then utilities are gonna come into favor, and you're gonna be a rock star because you own utilities, right? But I just don't think it's one of those sectors that you need to focus on initially. Focus on the big ones first, and then look to get that utility exposure later on. All right. What are you making the most money off of right now? Apple and Facebook and Google. Google was on fire this week, guys. Amazon, I'm back in the black. I took Amazon into a huge downturn. I picked up 5 more shares of Amazon, and I'm killing it with Amazon. Making some pretty good money. I think JD.com right now is a buy. I'm doing very, very well with ExxonMobil. Guys, if you had taken my advice and picked up ExxonMobil in the low 70s, we're in the low 80s right now. ExxonMobil's going to 100. I mean, Chevron, I'm making killer money. All my oil stocks are doing quite well. Royal Dutch Shell has not participated. That's why I took 20 shares more of Royal Dutch Shell. Now I'm making money in everything right now. It was a great week in the stock market. It's been really well since the volatility in February, and we've been doing quite well, you know. So hopefully that give you some idea, some of the places that we're looking. Did you ever take a speculative stock such as under $5 while you were younger? I'm wanting to make a position in ACBFF, Aurora. Yeah, that's a good company, actually. I wouldn't necessarily consider them speculative, honestly. I believe it will be a monster in the cannabis industry. I agree. And I actually advocate for that move. If you guys are young enough and you're tuning into the Independent Investor channel, trust me, my message is a lot on how you build the value side of your portfolio. But if you're young, I want you to take risk, okay? But I don't want you to do it exclusively, okay? So don't miss my message. You guys can tune into me to get all the boring stuff. Just tune into Ryan. He'll tell you to invest in Home Depot and Apple. And it's like, yeah, because they paid investors off for, centuries. I mean, seriously, decades they've been paying for, and some of them a century, literally. J&J, these companies have been around forever, and they've done nothing but reward shareholders, But certainly, my rule of thumb is to take, 5 to 10%. If you're a young person, let's say you invest in Aurora and it ends up running up for you 200-300%. Look at all that investment capital. Now, do I want you to save it long term? Not necessarily. I'd love to see you take that 200 or 300% and then roll it back into a cornerstone. Take some of those profits and use those profits to buy good quality stocks on the back end, and then go ahead and backfill your trading positions. But 5 to 10% in the portfolio can be allocated to a little bit more aggressive name. You're going to lose on some of them, okay? But you're also going to potentially win on some of them as well. And I think that's really, really important to understand. As long as you make those positions in your self-directed account. Now, the one caveat that I will offer is those contributions that go into that account. If you end up making a risky investment and it goes down, it's going to be a little bit of a setback for you, because it's not like you can top up your Roth IRA again. Once that $5,500 contribution level is met, if you invest that $5,500 into a risky stock and it goes to zero, you're done. You're done for the year. They're not going to let you just take another $5,500 and try again. So you have to be very, very careful with your investment capital in your self-directed account. And that's why I typically try to invest in the safest of the safe, because even safe stocks fluctuate and go up and they go down as well. All right. So that's just my way of investing, but I absolutely advocate for those types of move. And I think Aurora is probably one of the very best that you can invest in. So I would advocate for that move. Absolutely. Just don't make it a habit and don't make it exclusive in your portfolio. Make sure that you're having those cornerstones built up as well before you take on the luxury of entering into trading positions. All right. Thank you, Jake, for that question. How do you have people invest in your products in the stock market instead of you investing in other companies in the stock market? How do you have people invest in your products in the stock market instead of you investing in other companies in the stock market? I'm not sure if I understand that question. I'm going to skip over that one. I'm going to think on it as I've read through it, but I don't get that one. Congrats on your promotion. How are you? I'm doing fine. Thank you. It's still setting in. Thought I'd take a moment with my subscriber group and kind of hit up some of these questions since we missed it last night. So very, very cool. I've got Baba again. PayPal is a solid platform which will work with MasterCard, Visa. Yes, I'm aware. And many, many banks has worldwide business. Actually, they own the market. PayPal owns 1 out of every 6 transactions actually that occur in the world. They're huge. I advocate. That's great. Just make sure that if you're going to expose your money in the financial sector in that particular way, I'd love to see you own a big bank with it too, or enter into, I try to counterbalance some of those growth names with a good value play as well. That's just how I do it. Because if I do take an adjustment back in PayPal, then I can say, okay, I've got my JP Morgan Chase over here that's working and paying me boring money, while this is the sexy money over here. PayPal's the sexy money. JP Morgan is the boring money, okay? But at the end of the day, money is money. And this game is about money, okay? So if you enter into a stock that I potentially don't own and that you own and you make money, you're a winner. I'll be the first to congratulate you, all right? The last thing I want to do is see you guys enter into positions that's going to hurt you. And PayPal will get it done for you, no doubt about it, all right? Awesome. Yes, I tried having a group discussion with buddies, and it seems like I hit a nerve, seemed like a total taboo, just don't get it. Yeah, I stopped doing it, honestly. Unless somebody comes up to me and asks me, it kind of speaks, like some people, it's like, I don't know if like they're just destined to not be an investor. I don't think that way. I'm trying to look for every advantage in life that I can get. I'm hungry. All right. I don't come from money. I don't. So who the hell do I think I am if I can just be like, nah, I don't need investing. I don't believe that. I believe I need investing. I believe I need to secure my financial future. I have a legacy to pass to my children to make sure that maybe if they want to make decisions in their life that I didn't get to make, right, I owe it to them. And I'm very serious about this topic. I don't throw it around lightly. It's a serious topic, and I love engaging in serious discussion, but you're absolutely correct. I tend to kind of stray away from 2 topics. One is money and one is politics. I don't talk about either one in group settings, right? I believe both are my business, but the reason why I came out with the Independent Investor channel is to honestly share a message. And I'm one of those guys that I won't argue unless I'm right. I'm right on this. I'm right. And I won't stand in front of a group of, 30 or 40 subscribers on a live feed and tell them that I'm right without being right. I'm sorry. I'm right. If you want to share this information with people that you like, great. People that you don't like, or people that are friends but are not interested in finances, don't share it with them. If you think that they're going to listen and they're going to change their thought processes, I just find that a lot of people already know it all. And those are the people that I really can't deal with, because I love engaging with people. I love talking to people. I've learned so much from people, and I know I don't know it all. I know I don't. Go read some Socrates. It's the Socratic method, all right? You don't know it all, and people who think that they know it all are really not that attractive to me anyway. I don't even like to be around it. I don't. Humble yourself a little bit to understand and evolve and make sure that you can take in a new idea. That's going to resonate with your entire life, not just investing. All right. If you think you know it all, you're probably not going to make it very far in life. I don't have any help that I can render for those type of people. I don't. I really don't. Do you have another YouTube channel about investing stuff, or that someone else? No, I don't. I have some channels that I recommend through the Independent Investor channel for a lot of different reasons. My very good friend, I'm probably going to head up to upstate New York this week and look to do a joint session with Ryan Scribner. Ryan Scribner is probably the best channel on YouTube that I would advocate for a lot of different reasons, okay? A lot of different reasons. And I don't make that endorsement lightly. I believe I'm one of the best, no doubt about it, because I'm one of those guys that talk about this and do it. I think a lot of people are full of crap, no doubt. I think they're doing more damage to people than good. I think they're doing it for their own benefit. I really do. So as far as advocating for other channels, financial information is very good. If you look at my list of endorsed channels, I really like Nate O'Brien. I think he's one of the sharpest guys on YouTube. Brent offers the Financial Investor channel. He's also one of the guys that I advocate for. And then finally, I've got the Monk Way, who started YouTube, I think, after me and is running a very successful channel. But those guys that I endorse on my Independent Investor channel, if you click on the channel, you'll see those guys that I do endorse. And Ryan Scribner is right at the top, and he'll continue to be there. That's just the way that's going to be. Yeah, those are the guys that I definitely advocate for. If you kick over to those channels, you're going to learn a lot. Scribner's really good about getting into technical and fundamental analysis. He offers a lot of really, really good stock information to help new investors just from a different perspective. And I would encourage you to seek those out. You don't need to hear opinions from just one person and buy into it. All I would ask is that you try to understand where somebody's coming from, all right? Understand what their motive is by putting out information. I openly advocate for my motive. I absolutely do. I just think that a lot more people need to understand the prospects of not only investing, but investing as an independent investor. Honestly, I think more people out there need to know about this option. They need to understand that this option is out there. So I hope that helps. Indie Development Labs, you've been hitting me with some killer questions tonight. I really appreciate your participation, but kick over to the Independent Investor channel and kick over to those other channels. And look for me. We're going to try to put something joint together with Ryan Scribner's channel. That ought to be good, because that's a couple really powerful messages coming through. I believe my message is one of the most powerful messages on YouTube when it comes to stock investing, because I watch a lot of channels, and I'm not trying to be rude, but there's a big void going right through the middle of a lot of those channels, and they miss a lot of real credible information that is not really that appropriate for investors that are just starting on the ground level. All right. My middle schooler thinks this flip phone is embarrassing. Yeah, I got a lot of crap for mine for a long time, but I also compared my bill to a lot of people's. I was paying $37 a month, whereas a lot of people were paying $150, $200, to pay those. And I think in a lot of cases it can be justified, but as long as you acknowledge that it is a luxury item and not a necessity item, okay? I do not put smartphones in the same category as food and fuel, okay? Food and fuel you have to have. A smartphone, an Apple phone that's going to run you $1,000 now with $150 a month price tag, it's a luxury. And if you can't afford it, then don't justify affording it at the expense. I'd rather see you start an investment account and build that account up over time. And down the line, you can go ahead and justify a smartphone. And just having a Facebook account and an Instagram account, that's not good enough justification for me. Sorry. Hate to deliver the bad news for you, but keeping in touch with friends through social network is not good enough for me. No way. Sorry. I'm a big believer in Aura, Jake. Made a lot with Aurora. Thank you. Got around in 2. That's awesome. Doug came back for Jake. That's awesome. Investing is an art, not a science. That's why it's important. The mental and psychological aspect I couldn't agree more. And that's why we generate these discussions the way we do, so we can kind of support, the new investor who, maybe think that they're out there on their own. A lot of people, they'll go in and they want to invest, but they end up investing out of aggression, and they end up investing in the wrong way. And you'll end up reflecting on investing in the wrong way. You'll end up regretting those decisions. And it's really unfortunate. We're trying to avoid a lot of that right now. All right. Try to work down and get through all these questions, guys. A very, very good live feed tonight. I'm excited. Is there a way to speak to you without being public? Yes, there is. Hit me up through my Gmail, and you can ask me any question that you want. The Gmail account is on my independent investor site. It's ryan.independentinvestor@gmail.com. It's ryan.independentinvestor@gmail.com. And that email is actually on my channel. You hit me up with anything you need, Les. I will help you. And I will look forward to your email. Okay? I look forward to that. Thank you very much. Hello, just dropping by before going to sleep. Good night. It's Dutch Sword, one of my most loyal subscribers. It's awesome. Nice to see you. Very cool. How do you tell the difference between an investment and a scam? How do you make sure you don't get scammed? You're coming up with some killer questions. As a matter of fact, I might scroll back through this and do some YouTube videos on some of this, some of which I've already done. But Indie Development Labs, go with your gut. Honestly, when I watch some YouTubers, I don't get where they're coming from. If they're looking to put food on the table, now I'm not saying that's the end all be all, but I can look at certain people and just tell that they're not genuine. They don't really care. They're looking to push an agenda and just push out a bunch of content. I see a lot of channels just regurgitating content and putting it out there because it's the news of the day. I mean, just use your head a little bit when you're watching some YouTube channels and they ask for money. And I've never done that, and I won't do it. I won't. I don't care. The only money that I'm upfront about asking for, now I did just get tipped $2 tonight. That was pretty cool. But I'm very open about my advertising through YouTube, okay? And there's a reason why I do that. I have a pretty significant financial investment in this channel. And, to help compensate for some of the equipment that you have to buy, the laws of incorporation that you have to abide by to actually start the LLC. I've done all that legitimately. Some of the props, and even just to compensate for myself for my time, I do it through ad revenue. That's it. That's it. But as far as getting information from somebody even like myself, who's not a financial planner, not an investor, I put the level of value on that. That's my opinion. I don't think it's worth any amount of money to go to a financial planner and pay them for the services rendered. But as far as scams go, you have to think about, let's talk about penny stocks, for example. That is a scam. It's not scalable. And the statistics back me up on that, okay? If you had multiple people getting rich in this country on penny stock scams, then we would hear more about it, but we just don't. All we ever hear about is people going online and wanting you, who may not have $6,000 of investment capital, to pay somebody $6,000 with the promise of them making you a millionaire so you can go out and buy a Lamborghini, okay? Use your gut, right? When somebody's asking you to pay a monthly fee for a pamphlet or a news article that you can just as easily find online for free, then it's a scam, okay? And I'm quick to call it a scam. I really am. If I don't see a whole lot of difference between a scam and a ripoff, okay? A lot of people want to differentiate between the two, but here's the thing. If you're offering a customer a product for compensation, it better deliver something unique to your customer. It has to. It cannot be publicly identifiable information, okay? Because honestly, the information about self-directed investing, you can find it. It's available online, okay? The difference is I don't charge for it, Okay, so you can either disagree or agree with my information. You can either run with the information, but at the end of the day, I don't charge a dime for it. You can turn the channel off at any time. It's no problem. All right. I do this channel at my leisure to provide information that I know, I don't think, I know helps people. And by doing that, we will continue to grow and spread the message throughout the community about the benefits of eliminating fees within accounts. That's what it comes down to, because way too many people out there pay way, way too much over an entire lifetime. You only have one life. You only have one life. All right. And it's too big of a screw up to invest for 40 years and subject your money to a fee schedule that is going to cost you hundreds of thousands of dollars. 40 years at a 3% management clip is going to cost you 60% of your money. 60% of your total overall potential return will be lost to the financial planners if you opt into a managed situation. That's a fact. That's not my opinion. That's mathematics. It's a fact. You will render back only $400,000 instead of a potential $1 million if you invest the way normal people invest, a starting amount, etc., you dollar cost average, and they all think they're doing the right thing, only to find out that when they retire, they look at it and they say, wow, I've got $400,000 in my retirement account. I only contributed 190, so the money doubled in there. But what could that money have been if you didn't have the money managers in there taking their 3% off of what you think is 8% per year? But that 3% knocks it down to 5%. And how that affects the compounding effect going forward. That's a key to the channel. It's the key to the channel. And if you guys, I mean, that's just my opinion on how to identify a scam. And you really have to be careful. I would just say, look, if anybody's asking for your money, blow it off and find something else. I think you can get all the answers from the Independent Investor channel. That's just my selfish, opinion about how good I think my channel is, because I don't think I know I'm good, because I've got a lot of validation of people coming back to me and thanking me for offering the message. And it didn't cost them a dime. I didn't take any compensation whatsoever for providing information. It was just out of my heart and out of my desire to start the channel. And I've got some good ability, to offer this message and break it down for people so they can understand it. Why? Because I do it. I do this stuff. All right. And you could tell if I was fake and didn't do it. All right. I wouldn't do the channel. Wouldn't do the channel if I couldn't put this message across clearly. All right. That was an awesome question. Thank you. I struggle between two philosophies, buy and hold forever and buy and take profits off the table. How do you find the right balance between the two? I do both. That's actually one of the best questions of the night. I've got David Strauss hitting me on, I always try to keep a fundamental base, okay? And when people look to start getting invested in the stock market, they always want to trade. They want to see it go up 20% and they want to trade out of it. That's okay when you're looking to build position, okay? But when you have a lot of investment capital, I have holdings in my account that I will never, ever trade, ever. I'm an investor. I will buy more when it dips. I have them set up for dividend reinvestment, and I will not affect what I know will affect the compounding effect in those stocks if I start tinkering with them, okay? So I am an investor, all right? Names like Facebook, okay, I'm an investor in. But if it runs up and I think that the market is at an all-time high, I have no problem taking positions off the table, all right, and realizing profit, okay? I've done that hundreds of times, okay? So it's really a difficult question to ask, but here's the thing. Do you want to be an investor, or do you want to be a trader, or do you want to have the luxury of doing both? Okay, I contend that you can do both, but it has to be in due time. If you're a beginning investor and you have $5,000 to $10,000, be an investor. All right, you don't need to work on trading in and out of positions. When you get up to $50,000 in your portfolio and you've got a good diversified base, you have very good exposure to the S&P 500. You've been investing for a few years. Your risk tolerance has been tested and defined over that time. Because here's the thing, if you don't have the tolerance, if you award yourself a risk tolerance of an 8, and you start becoming a trader and you lose 20% on every trade that you make because you can't handle the swings in the stock market, you're not a level 8 investor. You're a level 3 investor. And a level 3 investor, you need to be an investor, not a trader. All right. So it really, really comes down to the individual's risk tolerance, capital that you have available, your ability to keep a budget, your ability to meet investing thresholds in your life, pay yourself, i.e., get yourself that $1,000, $5,000, if you've got 10,000, 50,000, etc., put away, then you've proven to yourself that you can do it. David, if you've got $50,000 in the account, certainly take 5 to 10% of that and enter into a trading position. To me is Facebook, Google. Now, I'm long those stocks, but I would have no problem with going ahead and trading out of those positions if I need to. General Electric is a trade for me, okay? Once General Electric doubles, I'm going to sell the stock. I'm going to move on to something else. I'm going to probably use those proceeds to buy an investment like a John Deere or a Caterpillar or a Boeing, okay? That's going to beef up my industrial holdings, all right? But kind of have those ideas in your head about positions that you don't mind entering into. And if it runs up 20, 30%, you don't mind exiting the position. JD.com is one of those for me. It's a high growth name. I don't necessarily need to own it long term. Alibaba, I just did it. I got a run up in Alibaba, 20 basis points. I'm good. I exit the position. Is it the right or wrong decision? I think so many people want to talk in the stock market about definitives, right? When is the absolute perfect time to buy a stock? When is the absolute perfect time to sell a stock? Neither one of those exist. Neither one of them. So if you're up in a name like Alibaba and you sell at 10 to 15%, you're a winner. You've won. Just don't sell it in the red. Don't ever get into a habit of selling any good quality stock that you buy in the red. So it is really just a philosophy on how you think about that. And this is something that as an investor, you will evolve with over time. But you are not going to trade into 100 winning positions like I've done over my career overnight. No way. You're going to log a win and you're going to log a win. You may go into a downturn with a stock and you may wait it out until it goes positive and then exit the position for a win. But you're going to piece together those trades. All right. You're going to piece them together over time. And hopefully those trades, you've taken enough profit to roll them into really good passive long-term assets. And that's allowed you to grow your portfolio. Make no mistake about it. That's how I've grown my portfolio over time. And I didn't grow my portfolio over time by just buying into stock and holding it forever. No way. It's not in tune with my personality. But I do a good mix of both. All right. And I really do struggle with that balance of being a more passive investor as opposed to being, taking more trading positions. It's a constant struggle for me too. I get it. I really do. But it really kind of comes down to, Sarah hit you up and said, great question. I agree. I'm actually going to make a YouTube video on that. I have made YouTube videos. I haven't made one on that topic here recently. But I have done that in the past, and trust me, it is a constant struggle. But think about it from this perspective. You're either an investor or you're not, okay? By deciding to either buy, sell, or hold a stock, you are exercising your luxurious right as an investor that a lot of people just don't even put themselves in the position over here to exercise their decision over here, right? So if you're looking to hold a stock long-term, that's a good decision. If you're looking to sell a stock and take profit off of that position, those are all winning positions. You know what I mean? So it's not something to really fret and lose sleep over. It's just one of those things that we will continue to discuss and evolve with our philosophy on identifying when those times are to sell stock and when the times are to hold stock. Most of the time I monitor the stock market and I don't move at all. All right. I'm going to go ahead and finish up, guys. I've been going this has been the longest live feed, but I'm going to try to get to these last session of questions here. I just took care of David's question. That was an awesome one. I'm going to do another video on that. That's really good. Please show your appreciation by hitting the like button. Les Gibson, thank you very much, man. Yeah, if you guys do, that would be great. Hay just got off to work, bought Venom yesterday, 28 shares. That's a good one. I think the upswing of oil is really going to help you, and you're going to get paid that fat dividend in the meantime. That's a good buy right there. Michael Babcock, no doubt about it. It's a high growth name, okay? I sold mine for profit, okay? I did sell out of mine, but I think Venom continues to increase. High growth name. I think you're going to make killer money with that. All right. But my only 3 oil holdings right now are Royal Dutch Shell, Chevron, and Exxon, the 3 big boys. I've got all 3 of them right now, and I've got pretty good positions on them, 7% of my portfolio. I did buy at 25 in February, but sold at 30, put that profit into Apple. Nice. Saved 1,000 this month, and then put that into Venom at 30. I think that's awesome. Look at it. I'd rather buy Venom than I would a bond. You know, I mean, Venom pays what, a 6-7% dividend? It's a limited partnership, I believe, or a I believe it's a master holding limited partnership. I believe. I think it is. Yeah, that's a good deal. I think you're getting good there. I think eventually Venom doubles. So that's just what I think. South Korea's on the line, man, on a Saturday. That's very cool. Thank you, Keegan. Nice to see you. You can play back this feed when you wake up. Hello all. Didn't know Ryan was hosting tonight. Was searching Friday, but didn't see the live chat. Thanks, Ryan. As always, I will watch the rerun. Yeah, I apologize for that. I took a very big advancement yesterday at work, and needless to say, I was celebrating into the night, and it was a well-deserved celebration for me. Yeah, guys, hit the like button for me, man. I really appreciate the support. I just now got Financial Investor kicking in here. I apologize, Brent. I threw down on this on Saturday. I missed yesterday. Took that promotion. Yeah, just joined in. Did you get the promotion? Yeah, I did yesterday. So I was pretty busy last night, you know, with my shipmates celebrating a little bit. So it was really, really cool. But we're going to be back on schedule next Friday again. So look forward to that. Also like Dr. Dividends on YouTube. I will look into that. Thank you, Doug. Those good channels on there. I want to identify those guys. Whiteboard Finance is another one as well. Very, very good channel as well. I'm sorry I didn't mention him as well, but Whiteboard Finance is also very, very good. Highly recommend his content as well. Like Jeremy from Financial, he's a piece of work. Yeah, I won't name channels specifically like that. But if you guys read through the lines in what I've said over my catalog of videos, you can absolutely derive the way I feel about that particular channel. And that's all I'm going to say about that. Piece of work. Yeah, absolutely. I hope he's getting rich off of people on YouTube, man. I don't want to see ill will for anybody, but I think he's making a lot of people, making a lot of money off of people. By providing information that you can just find as equally as easy online. Really, I don't really see anything unique about his message at all. That's all I'll say about that. But go back in some of my videos. I've picked out some information that he's put through the main channels that I couldn't believe somebody was willing to do it. What I can't really understand is the loyalty behind the following. I don't understand the loyalty. And I think it's a lot of young kids that actually go on there and like the charisma, I guess. And, you know, jumping through flaming hoops is not something that I will do. I tend to take money a little bit more serious than that. And quite frankly, I don't want people. I just had somebody come on the channel from that channel and start bad mouthing and getting into fights with some of my subscribers. So I went in there and blocked his ass. So he doesn't have access to my channel anymore. I don't want people on my channel that are going to spread venom. And I know once the channel gets bigger, you're honestly going to have a lot of people that come on and hate. I don't have any place for that at all. No way. I'm not going to apologize for putting a message over the airwaves free of charge. No way. He charges for his content, so he needs to take responsibility for the content and the impact that he's having on people. Again, back to my point of charging people for content. That's just the way I feel about it. All right. Ryan, your information is very educational and is good. Yes, as gold. Yes, thank you. I think it is too. I think we're helping a lot of people. What do you think about GE? I think it's good. I think we're going to buy it. I think it's going to take a while to turn, but I look for General Electric to be a doubler. I think people are going to look back here at $14 and they're going to wish they would have bought it. Have you considered buying real estate, by the way? Don't think I've asked in the past, or own a note in your Roth IRA. That's a really good question. I do own real estate in the Roth. As far as real estate, I've owned 2 homes, and I'm actually in the arena right now of learning about foreclosures and learning about developments. And this is kind of a grander question. So Financial Investor hit me up on a very cool question, and I appreciate you asking me. There's a lot of underlying reasons as to why I put out the Independent Investor channel, and I would have never, ever got to meet fine folks like yourself, Brent and Ryan Scribner, and some other few key community players and a few subscribers actually that I know. And I'd like to put something together someday down the line when we have some capital to look at development. That's really my interest. I'm very much interested in the foreclosure market, but foreclosure margins have really, really condensed in that if there's people out there fighting for a few $1,000s worth of profit, and they're willing to take the chance and risk that somebody's destroyed a foreclosure just for the chance of making a few $1,000. I'm not really into that. I'd like to start from the ground zero and look to develop some property. I'm getting the financial capital that I may need myself, but probably will look into the future as to getting a kind of a co-op of people together who want to go in on a project. And I'll probably do the first few projects myself before I start bringing in investors, but that's a little bit down the line. That's something that I'm going to kind of do when I'm not wrapped up in my career so much, because I work really, really hard on my career. But I have owned 2 homes in my past. I've made very good money with both of them, but I've just done that on the open market. And I've rented here in New York. I have to, and then we'll be renting down in Virginia as well. But that's a very, very good question. Yes, I've considered it, and I've also kind of talked to Ryan Scribner a little bit about it too. And just to kind of set those seeds now a little bit. The quote in Wall Street when we talk about where real wealth comes from, most of the wealth comes from real estate investing. And I'm not really talking about real estate brokers. I'm talking about real estate investors. And I'm very interested in the topic. I see that in my future. That's just where I see going. I love doing business with people, but I would love, and I do have the imagination to actually look at a project. It's one of my side projects. I look for land for sale. Online, I do look at foreclosures for sale, all in every state. So I've got some really cool websites. I'll actually kick that over onto my Facebook group and share those websites that I use actually to kind of peruse. It's kind of just a pet project right now for me, just to kind of, and I've been doing that for years to kind of educate myself up on some of the niche markets, what you can kind of get in Florida, what you can kind of get in the Northeast, what you can kind of get in the Northwest or the Midwest. So things like that. I appreciate the question. That's very cool. Yes, I've considered it and then some. So do we need to worry about tax consequences on buying and selling inside the self-directed Roth? No, you do not. You could do whatever you want. If you could take that self-directed money and grow it to $1 million as quickly as you can, you're tax protected, but you would have to wait till you reached 59.5 to realize those capital gains in that account. Okay, now contributions can be withdrawn from a Roth at any time, but capital gains is only eligible to be withdrawn when you reach the eligibility age of 59.5, and that way you could actually start withdrawing on that account free of charge. There is no tax within a Roth IRA. That's the beauty of it. Okay. But there's a balance between getting too aggressive and seeking that $1 million too quick and just putting nice passive long-term assets in that account that are going to pay you over time. That's a really good question. Thank you. I have a question. In your portfolio video, were all those stocks in your Roth or your regular brokerage account? I've got that's a really good question. I've got 70,000 in each of the Roths, and then about 40,000 in the brokerage account. And then I've got a significant amount of cash built up as well in savings. So that give you an idea. It's spread between 3 accounts: 1 brokerage account and 2 self-directed Roth IRA accounts. Okay. I do have a TSP account. I don't need to disclose that amount to you guys through YouTube, but the self-directed accounts, that's spread across 2 max funded self-directed accounts every single year, max funded at $11,000 each. And then a brokerage account because I'm capped out on the Roths. There's nothing else I can do. So I needed another fund that I could invest in. And that's where the brokerage picks up. That's why I have the brokerage account. And I do own single stock in there long term, because that is a tax account. So if I sell short, I do pay tax on that money as earnings, which is fine. I made an extra $10,000 last year just trading in my brokerage account outside my investment accounts. So I paid tax on that $10,000 as extra earnings. And that's just the way I did it. So that's a really good question. Thank you for that. Congrats on the promotion. Then you should be looking at tax liens. I will send you some info. Oh, nice. Please send it over. Yeah, thank you, Les. I appreciate that. I'm going to look forward to your email. Thank you very much. I've got Ernesto. Congratulations. Nice to see you taking a look at that. We're looking to invest local. We had considered turnkey out of state, but prefer to build my experience local and buying auction foreclosure. Nice. I've been going to real estate meetup and been working and learning from other local investors. Wow. I should be making the move very shortly into my first. I have my own home. Nice. Keep me posted on that, man. I'm very interested in that. I wish you all the luck in the world. There's a certain threshold that I am looking to get to before I dabble in the investment world with regard to real estate, because there's a lot that can go wrong. There's a lot of permitting that can be required, especially on the development side. So I'm going to make sure that I have a ceiling above me so I can take care of any problem. And in real estate, money can take care of any problem that you run into. Guys, I'm going to wrap it up tonight, man. This was almost an hour and 45-minute live feed. Thank you so much for all the votes of confidence and congratulations. I really appreciate it. We're moving the right direction. I'm going to continue to kind of sell out a little bit for the country, but this is a project that I enjoy doing. I'm very aggressive on making sure that you guys get your individual questions addressed. I know everybody's coming from a different perspective, and that's a great thing. Go ahead and hit the like button. I guess that supports. Thanks for the $2 tip. That was awesome. That just makes my night. But I'm going to go ahead and continue on with my evening. You guys have a nice evening, and we will schedule this back on regular schedule next Friday, Eastern Standard Time, 9 o'clock Eastern Standard Time out of New York, United States. So thank you guys very much for tuning in, and good luck in your investment future, and we'll see you next week. Thanks a lot, guys.